Hi, this is Kim Watson. Welcome to the big picture. So what I am going to do here is run through my analysis of the larger markets, looking, as I say, from the very high level basis in terms of what's happening at the moment from the numbers and what's being said, and what may happen as we move through the earlier part of the new year. So I'm going to start off with the US, and we've already seen a bit of a shift in comments here from the head of the Fed, Powell. He's suggested Fed ready to shift policy quickly and flexibly, ready to use all of our tools. In other words, he's taken a bit of an easing from the sort of more bullish and hawkish rhetoric that we've seen on interest rates of late. Now, this has been slowing down. It's not been any surprise in some respects that there's been a slowdown, because there was already, from the dot plots and the analysis that I carry out on a regular basis, expected 3, maybe 2 interest rate increases next year, if at all. Now, as I say the if at all, there is certainly on the Fed Watch figure, it would suggest there aren't any priced in at the moment. However, it's expected that when we see a lot of these speakers, and there's a lot of speakers coming in Wednesday, Thursday, including the Fed Chair, and this will create some volatility in the coming week, I'm sure, particularly these speeches when they occur. We've also got the FOMC minutes on the 9th, so we've got plenty to be looking at in terms of US at the moment. One thing I would stress is they will be looking at numbers, and it will be these are absolutely key. We've got the services data, or the non-manufacturing data, coming out later today, 3 p.m. this afternoon. But where does the big money see the chances of interest rate increases? Well, I'm looking at the likes of PIMCO and such, and they're still sort of forecasting 2, maybe 3 increases. However, I think there's a lot of expectation that there will be a lull in these, and it is data dependent. Now I'm going to just run ahead here and look at the manufacturing data, for example. Now this came in on last week, and it drops more than was expected. It's been bubbling along quite nicely for most of late 2017 into 2018. In fact, it was increasing nicely through 2017, and within reason of the sort of dynamics of the numbers, etc. Jumping along quite reasonably, but we have seen this more significant drop here. Its contraction comes when we hit the 50 area, so it's not into contraction at the moment, but certainly was a bit of a bigger shocker than elsewhere. Now, to put this into perspective, and I think it's very important when we look at this data, is to look at what's been happening in Europe all of this time. I've just run this off the flash data. I should have probably looked at the end data, but it's pretty much the same. But the growth, just as you can see this in the strength of the euro, effectively, has been diving down all this time, and it's not too far. It's getting even closer to the 50 zone. Now, some countries, I think it was France, that actually just run into negative territory. So it's certainly got the potential to roll further on that, and so it's keeping things together as opposed to anything else. What may be the shocker, of course, is that the US data has been rocking along not quite nicely there and taking a more of an abrupt drop there, but that can happen. In the UK, just to put things, close the picture off, it too was seeing a sort of a drop, but in the last couple of months we've seen these sort of figures bounce back up somewhat, but I wouldn't be surprised if that takes a dip as we move through into the new year. But that's an important picture when you're looking at your pairings, in terms of, at the moment, there's the potential for the euro maybe to gain a little bit of territory against the dollar, as I see this sort of negative rhetoric running against the US dollar at the moment. And we've seen the dollar index, if you're looking at that, or you can put the euro dollar upside down and get the same thing, suggesting, well, it's consolidating where it is, popping back a little bit, and against the other majors it certainly has pulled back, but I would be wary of it going too far. It may push on. I've got to take a slightly bullish hint in some of these pairs at the moment, but I am very wary of the if things were to get really poor, money goes back generally towards the dollar and the yen, which will mess things up if you're trying to trade the yen as it should be going. Anyway, so that's for this week. Be wary Wednesday, Thursday. Lots of data coming out there, of course the minutes as well, and then we've got inflation on Friday. So and it is data dependent, so as soon as they're telling you data dependent, watch out for the key data that's coming out each week, because it can have a much bigger effect on your pairings. Euro dollar then, or euro I should say, not euro dollar, but the euro on its own for a moment. Just looking at what's happening here, they've ended the bond buying in December as expected. Focus on the numbers to determine the next steps is what they're basically saying as well. So again, numbers. What's out this week? Well, we've got an ECB monetary policy meeting on the 10th, on Thursday there, and of course we've still got Brexit going on. That can have an adverse effect on the euro as well. So euro dollar wise, I'm looking at the trend of the charts there. Well, downside really in the bigger picture still, but a bit more choppy, and we're going pretty sideways on the dailies. The pound, well, we can't get away from it. I've left it there, Brexit there. We've got the Bank of England governor speaking on the 9th, so that's again on Wednesday. Then GDP and main production on the 11th. So the GDP as the monthly figure seems to have less impact. The manufacturing production certainly on the 11th will have a bit of impact, and it'll be interesting to see how that moves further. Looking at the sentiment, one thing I'd say with all this sentiment, the short positions increasing on the euro actually, and the longs reducing still on the euro here from the bigger money. This was dated last time 18th of December, so it's the last of the readings really. Well, I'm waiting, and we'll get a reset hopefully coming. We'll get back to normal this coming weekend. So but this data is delayed on the site, so there's nothing much more we can do about that, but it gives us a bit of an idea of where it was going just before Christmas. So the pound, in a sense, it's looking like it's got the potential for short surprises all the time. I think it would be hard, particularly with Brexit conversations and coming out, for it to rally too far ahead, but they may be giving us opportunities to sell into. Dollar yen, as I've already said, it's a hard one, and when money is going to, when it's moving away from the markets in general, it's going much more towards the yen, and hence why the US dollar yen has changed course over the last couple of weeks and is now in a downward trend, the dollar yen, and both daily and weekly at the moment. But short positions, well, short positions have been reduced slightly on both sides of the fence a little bit. So actually, sorry, they've come off a little bit actually on the bit bigger money there. The hedge funds, they've actually increased theirs. Right, Aussie dollar. Right, we're seeing sort of, we've got a couple of numbers coming out this week. Building approvals, retail sales, 9th and 11th. They could, well, will certainly give some kicker to the Aussie one way or the other. The trend has been largely down, and technically a bit more choppy in the short term. May have the chance for a bit more of a bigger bounce. We're not massively long or short on the sentiment isn't particularly the shorts. Put here, they're actually, I think they must be reducing slightly there, and we're on a sort of almost crossover period in terms of the hedge funds there, so it may be looking that there's maybe more upside on the Aussie yet with sentiment there. Canadian dollar, Bank of Canada base rate statement and conference, etc., all on the 9th. So Wednesday, busy day for the Canadian dollar and the markets in general. Choppy as anything potentially now. We got and hit from a weekly point of view. We hit some targets I'll show you in a moment. I expect it to be hit. That's done now. It's rolling, and it's rolling on the dailies as well. Choppy, but potential for more rollover there to the downside for sure. New Zealand dollar, nothing significant coming out this week. Longs, they've increased slightly, reduced slightly from the beg your pardon, increased on the long side from the asset managers, and the shorts are actually actually these have increased back a little bit more from the hedge fund, so it's switching back into that more bearish look, and in fact it has been a bit more bearish on the weeklies of late, and technically a bit more choppy on the dailies. Futures, S&Ps, well, again, figures there, they're sort of balanced at the moment, really around that 50 sort of area, balance from the sentiment, and well, it's still bearish looking technically. Let's have a look at these markets then pretty quickly then, technically running through them. Euro, as I'm saying here, the way the rhetoric that's coming out more sort of dollar negative at the moment, I think it's just given the dollar that sort of bit of weakness, and we're seeing this sort of more likely euro could push and stay within this sort of tightish old weekly range. In fact, when you're looking on dailies, it's just such a mess really what's going on here at the moment. Could roll over again quite easily. I think it's been my preferential trade. Most days has been a short of late, but I'm fairly open to if this starts just breaking outside whilst this rhetoric against the US dollar sort of continues, but I think that may, once things are sorted there, continue its course, and you're looking back at, as I say, on the weekly picture, and that could be a break of those lows at some point and a move down. Pound dollar. Well, the pound dollar's is seeing well, it saw a spike, a massive spike down through the low volumes of last week, earlier part of the week there, giving us a double bottom bit of divergence. It's bounced up from that and holding up fairly well at the moment. It's looking like it wants to push up. It's put a bullish pivot swing in there, could become a bit more bullish from that perspective, but these technicals could well trick us into thinking all's good for the pound if you were looking at nothing else. And then we've got Brexit, so I'm quite wary of this. If it breaks above and closes above that 200, well, maybe it has got a more upside there, but I think there's some possible significant negative surprises potentially sitting out there. Dollar yen. Dollar yen is seeing strengthening, and as I said, this over the last few weeks as a consequence of money running to safety, and there's some plays that are taking part which is seeing this money run to the yen here, so the dollar being sold off here against it accordingly. Where to? Well, it's just on its weekly pivots at the moment. It's still got an untouched monthly pivot. If it was to start changing course, and we're seeing a bit more bullishness in here, but I think it could just chop for a while here. It's certainly not clear. It's not something I would want to even swing at the moment. Aussie dollar. Now we have got a bit of a change in plan here in terms of what may happen. It's sort of grounded out a bit of a low through that low spike of last week. Potential to push back up. Weekly certainly in a downtrend at the moment, but from a daily perspective, again, bullish pivot swing, may have a bit more opportunity. We've got some data out later in the week, but may have a bit more opportunities to follow through here a little bit. It's broken that sort of daily trend line that was crossing the highs here. That's been broken, and it's sort of good solid day on Friday, but it's up to its weekly pivot. It's still below that weekly pivot, so in some respects technically still bearish, and certainly not really out of the woods yet on the weekly picture, but it depends how it manages around this area. It's quite a key area. If it can pitch up above here, well, that we could be running up towards that daily 200 at some point. And again, a lot of this is based on the view of this, as I say, this rhetoric on the US dollar here at the moment. And for the weeklies on the Canadian dollar here, well, it pushed up to the 886. I'm going to remove that now. That target, all that target was being hit. It's done its wedge pattern out of there. I'm going to just take this off now. I've said enough about it, but it moved its pitch up there. Big picture, I guess, with the higher lows, higher highs in here, it's still bullish, but I can't ignore this week. It's sold off quite strongly at the moment, and from a daily perspective, well, you see it just sort of had a bit of a top-in pattern there. May have a bit more downside here to be had yet. It is tying up with oil to a degree. Oil prices pitched back up a bit late last week, and it's giving the Canadian dollar a bit more push. But of course, don't forget on the 9th we've got the Bank of Canada meeting, so we'll see what their rhetoric's like. Right, that's Canadian dollar. Let's look at the S&Ps for those S&P traders. And where are we with this? Well, I mean, we really have done a decent sort of pullback beyond that 236, bounce off the weekly 200, and it's seen quite a solid bounce off of it, really. At the moment, well, how far has it got? Well, it's got to the monthly pivot at the moment. Still technically bearish below that monthly pivot. If it can pitch back up there and push up today, we'll see. It has got a weekly pivot below, which may be an early week draw. We'll see if it pulls back towards that. It may just come back towards that today through the early US trading. But one thing it has done here, it's put a higher low in, so in the short term may have it, and with the sort of comments that have been coming out from the Fed there, that sort of more dovish tone, may see the stocks rally a little bit more in the short term at least. That is it for me. Have a great week. I will speak to you next week on this. Bye for now.